It is almost impossible to lose with this artificial intelligence TradingView indicator. With the machine learning mechanism embedded in this tool, you can open trades with high accuracy and avoid correction zones. In order to maximize precision, the indicator learns from its past performance and adjusts its signals accordingly. In this step-by-step guide, I'll walk you through this new indicator and show you how to use it correctly to profit from any market. We'll combine it with another secret tool to increase its win rate to maximum. The strategy is so simple that even an amateur can use it to make quick money. It is applicable to trading on shorter time frames like 5, 15, and 30 minutes. Traders, if you enjoy my content, please like this video and subscribe to Magic Indicator Strategies. On this channel, I teach the latest and most effective trading strategies in the simplest way possible. Without wasting any time, let's begin the tutorial. To apply the first indicator to the chart, open the indicators and search for Machine Learning VWAP by Yin-Yang Algorithms. If you're not familiar with VWAP, Volume Weighted Average Price, let me explain it to you in simple words. Volume Weighted Average Price is a trading benchmark used by traders and investors. It's calculated by multiplying each transaction price by its volume, adding these values together, and then dividing by the total volume of these transactions. Essentially, it gives you an average price for a security, like a stock or a commodity, that reflects both price and volume. VWAP can act as support and resistance, as well as a magnet for price. The machine learning VWAP, on the other hand, uses machine learning to identify the best location for the VWAP. Rather than use a traditional fixed length or simply adjust based on a date and time, machine learning could identify crucial areas where the VWAP needs to be reset. VWAPs may act similar to a Bollinger Band in the sense that they help to identify both overbought and oversold price locations based on previous movements and help to identify how far the price may move within the current trend. However, unlike Bollinger Bands, VWAPs have the ability to parabolically get quite spaced out and also reset. For this reason, the price may never actually go from the lower to the upper and vice versa. The reason for this is due to how the anchor location is calculated, and in this specific indicator, how it changes anchors based on price movement calculated within machine learning. Due to how the anchor for this VWAP changes, you may notice that the basis orange line may act as a trend identifier. When the price is above the basis line, it may represent a bullish trend, and likewise, it may represent a bearish trend when below it. You may also notice what may happen when a trend occurs. The price may push all the way to the upper or lower levels of this VWAP. It may then proceed to move horizontally until the VWAP expands more and it may gain more movement, or it may correct back to the basis line. If it corrects back to the basis line, it either uses the basis line as a support and continues in its current direction, or it will change the VWAP anchor and start anew. Let's take a look at how VWAP expands. Expansion may be caused by time, but generally it may be caused by price movement and volume. Exponential price movement causes VWAP to expand, even if there are price corrections to it. However, note that volume adds a large weighted factor to the calculation, hence volume-weighted average price. There may be times where both volume and price movement isn't significant enough to cause much of an expansion. During this time, it may be considered to be in a state of consolidation. When such a correction to VWAP occurs, check the market trend. This indicator makes it easy to recognize bullish and bearish trends since it colors upper and lower bands. When the trend is bullish, the bands are green. When bearish, red. Buying at the correction to the baseline while the trend is bullish is the most effective strategy for long trades. Let me give you a practical example. Here the price broke out of consolidation by extending above the upper VWAP band. The trend is bullish. This is confirmed by the green bands. Then a correction occurred with a pullback to the baseline. During the retraction, machine learning produced a buy signal in the form of a green triangle. The VWAP bands have separated from each other, indicating increased volume. Increased volume during a squeeze is a sign that the market is about to take off. The baseline retest can take place multiple times. The more it happens, the stronger the support. However, sometimes during this correction, the market loses momentum and the price keeps consolidating. This is due to lack of market volatility. Opening a trade during such time can cause unpredictable outcome. We as traders want to control as much as we can. That's why I will add one more indicator to the chart that will cancel many false alerts due to low volatility. This tool is called L1 Volatility Quality Index by Black Cat 1402. The Volatility Quality Index, VQI, is an indicator used to measure the quality of market volatility. Volatility refers to the extent of price changes in the market. VQI helps traders assess market stability and risk levels by analyzing price volatility. VQI indicator is presented in the form of a histogram on the price chart. Higher VQI values indicate better quality of market volatility, while lower values suggest poorer quality of volatility. This volatility indicator will confirm the machine learning VWAP signals. For example, if a buy or sell signal appears during low volatility, it automatically becomes invalid. On the other hand, if a signal appears when volatility is increased, the chances of it being profitable are high. Let me now show you a full trading strategy with take profit and stop loss you can try with these amazing indicators. For a long trade, the following conditions should be met. First, the price must break out from the range to the upside. Second, the VWAP channel must widen. Green bands should be separating from each other. Third, the price must pull back to the baseline. Fourth, you buy the security when the indicator produces a buy signal and the signal is confirmed by high volatility. Set the stop loss at the lowest point of the recent swing. Target 2 times the risk. Once the price reaches the upper VWAP band, adjust the stop loss to break even. Do the opposite for short trades. First, the price must break out from the range to the downside. Second, the VWAP channel must become wider. The bands should be red, indicating a downtrend. Third, the price must pull back to the baseline. Fourth, you sell the security when the indicator produces a sell signal and the signal is confirmed by high volatility. Set the stop loss at the highest point of the recent swing. Target 2 times the risk. Once the price reaches the lower VWAP band, adjust the stop loss to break even. This trading strategy is great for day trading cryptocurrencies and stocks. Be sure to backtest and forward test it before trading live. Thanks for watching. Till next time.